Hey everyone, eBay's stock is down 32.5% off its highs, and I'm going to make my case for why I think it makes for an excellent stock to buy at current valuations for both passive income investors and just stock market investors overall. You don't have to just be looking for dividends to like eBay stock at current valuations. So I'm going to go through my case for why I think it makes a good investment.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so like I mentioned, eBay stock is down 32.5% off its high. Even though it's performed relatively well in 2024, it's still down significantly off its highs reached in 2021. Remember, in 2020, 2021, when people were shopping from home a lot more than they are today, eBay benefited tremendously and its stock price increased. And then as the economic reopening gained momentum, eBay's sales and profits dropped, and so did its stock price. But I think longer term, eBay is an excellent company to benefit from the ongoing trend of people spending more money online versus in person. It's just so much more convenient to shop online instead of having to shop in person, and eBay will benefit from that trend longer term. Now, I know you might be thinking, well, eBay's dividend yield is not that great, but I will point you to the fact that eBay only recently started paying a dividend in 2019, and it has increased its dividend already meaningfully. It started out paying a dividend of 14 cents per share per quarter, and it has steadily increased the dividend per share. As you can see here, it's already up to 27 cents per share per quarter. That's nearly double where it was at just in 2019. So in just roughly 5 years, it has doubled its dividend per share. So while the dividend yield is not great today, think about where it will be 5 years from now and 10 years from now. And the reasons that I feel eBay will continue increasing its dividend is because it runs an asset-light business model. Remember, eBay is a platform that brings together buyers and sellers, and it takes a profit from each transaction on that platform. It doesn't need to invest in the expensive logistics network like some online companies such as Amazon need to do. And so eBay can generate better profit margins, even though growth will be slower, overall sales would be smaller, but the profit margins and cash flows percentage wise will be larger because it's an asset like business model. More profits and cash flow are generated from each dollar of sales when you run an asset like business model like eBay does. And so those profits and cash flows can be used to pay dividends instead of needing to be reinvested into the business. So speaking of those operating profit margins, you can see eBay's operating profit margin, 20% operating profit margin. This is more than double that of Amazon. Now, eBay only generates a fraction of the sales that Amazon generates, but like I mentioned, it makes more profit per dollar of sales, and that's likely going to be the case longer term as well because eBay's business does not need those reinvestments like I highlighted. Now, the profit margin fell because of the economic reopening and people spending more money away from home, but it's now back on the rise again. And there are two factors I feel are going to push eBay's margins higher. So first is the transaction take rate. And you'll notice that's the dotted line here in the middle. That was steadily rising. It increased all the way up to 13.9%. The last 2 quarters, it dropped slightly to 13.8 and 13.7%, but this take rate is up from around 9% a few years ago. So remember I highlighted eBay brings together buyers and sellers and takes a fee from each transaction. This is that fee, and it's been raising that fee for several years. And the good thing about this for investors is so are all of eBay's competitors. When merchants look around, let's say a merchant gets upset with eBay increasing the take rate and says, I want to leave, I want to go to another provider. Well, Etsy is increasing its take rate as well. And Etsy is closer to 20% take rate, while eBay is still at below 14%. Amazon has been increasing fees on sellers, right? Shopify has been increasing fees on sellers. No matter where merchants go, fees have been rising industry-wide, the fees have been rising. This is not unlike a decrease in competition. Remember how I so often talk about competition being bad news for investors? This is competition going in the opposite direction. This is the industry taking a look around and saying, why don't we raise fees and let's all profit more? Let's not compete for merchants. Let's raise fees, let's focus on profits, and that way merchants have to look around and realize that, hey, everybody's raising rates. So we just have to accept it. We can complain, we can make posts on message forums about how unfair eBay and Amazon and Etsy and all of these other platforms are, but ultimately we have to pay the higher fees. What we could do instead is raise prices and to recoup those higher fees. And that's what consumers ultimately pay, these higher fees, because merchants then pass along the fees on to consumers. And it's partly why inflation has been getting out of control, is everyone is passing along all of these higher costs onto consumer shoulders. It's all been placed on the shoulder of consumers, and consumers have had to pay higher prices for everything from shoes to fuel to housing. Now, the next factor that I feel is going to boost eBay's profitability is advertising revenue. You can see advertising revenue in the last 6 quarters has grown by roughly 20%, with one quarter actually increasing by 35%. This has been another trend in these e-commerce platforms, is they've been capitalizing on growing ad revenue. Amazon, Etsy, eBay, and Shopify and others have been able to generate increasing revenue from advertising because marketers are really interested in these ads, right? Consumers are coming to eBay with the intent to buy something. If a marketer, if a business can show an advertisement to a consumer, they're not that far away from making a purchase. They're in the purchasing mood, right? They're about to buy something, so you can get them to buy something. And so they've all been capitalizing on this trend, eBay included. 384 million in revenue from advertising in Q1 2024. That was up 20% from 317 million. And these are lucrative revenue sources. These are high profit margin revenue sources that's likely to boost eBay's profitability longer term. Now, cash flow from operations also has been solid for eBay, 21.66% in the trailing 12-month period. And that's been roughly around 20-25% going back 5-6 years. Now, looking forward, the analysts on Wall Street that are following eBay stock, they expect it will increase its earnings per share by 7.93% over the next 5 years. And like I usually say, eBay is not going to be the kind of investment that doubles your money overnight. This isn't a high risk, high reward stock. This is a low risk, low reward stock, a low volatility stock. This is a stock for investors that want to get a little bit defensive. This is a stock for investors that are perhaps feeling that the market is getting overvalued and that the consumer is getting stretched. And so they're going to look to save money, and they're going to look to perhaps maybe sell some of the things that they bought over these last few years on eBay because credit card bills are rising, income is not increasing as quickly, and the cost of living is increasing by so much that people might say, well, let me fire up my eBay account again. Let's look at that iPad that we had from 2017. Let's maybe sell that one because we have 2 other iPads in the house. Let's maybe look at some things that we can sell on eBay so that we can get some money, so that we can go out more often this month, so that maybe we can fill up more gas in the car this month because the cost of living is so high. So this is that type of investment. It's not an investment for those who are trying to ride the momentum and feel like, oh, if I get into eBay today, 3 months from now, I could potentially double my money. That's not likely to happen with eBay stock. But you are getting a good value for what you're getting in return in terms of profitability. 7.93% earnings per share growth expected, and you're paying a forward price to earnings of just 10.85 for eBay. So you're getting the stock at a relatively cheap valuation. Forward PE of 10.85 is roughly half the valuation of the average stock in the S&P 500. Again, it's not an expensive stock because the growth is not going to be there. You're not going to get fast growth from eBay. We saw that, less than single digit earnings per share growth expected for eBay. But it is a good investment, a good low risk, low return investment opportunity for investors looking at something that matches this characteristic. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.